What are the most costly errors landlords make with limited company accounts, company tax returns, and confirmation statements? Are you dreading filing your first tax return for your property investment company? Have you been putting it off and now it's urgent and you don't know where to turn?
Stay tuned, because today I'll be going through the 3 big mistakes we see property directors make in their company's first year. Plus, we will share what you need to know to get on top of things and tackle your taxes head on.
Hello, I'm James Poyser.
And I'm Nadeem, Head of Tax here at Provestor, the property accountants.
So now today we are talking about some of the errors that we see landlords make when it comes normally to the end of their first year with a limited company. We had a chat earlier on this morning and we found 3 really common things that people are doing. And the first one, Nadeem, very interesting, is landlords who don't think they need to do anything because they haven't got a property yet. Set up a limited company, they've not completed, they're not close to completing on the property, there's no transactions going through the company, therefore thinking, well, that's it, I don't need to do anything. Tell us more.
Yeah, absolutely, James. It's really important at this stage, being a director of a business, that you kind of know your obligations as a director once your company is set up with Companies House, or it's about to be set up with Companies House. And there's quite a differential between understanding what makes a company dormant and what makes a company active. And one of the common mistakes landlords make is thinking, because they've not purchased their first property yet, that they don't need to do anything. You know, ultimately there's nothing to file with HMRC, and they'll kind of deal with that problem as and when they buy their first property. And it's quite concerning how many people do make that mistake, because actually once you register the company with Companies House, the business is effectively active as far as Companies House are concerned. So your business may be dormant, and you may have to file dormant accounts at the end of the year, but actually the business is active, and therefore Companies House do expect you to file something at the end of the year.
Okay.
So having that upfront knowledge, having maybe a system or an accounting system in place so you can file those accounts, whether they are dormant or active, is really important.
Okay, and we were chatting earlier on today because it sounds like there's actually a couple of hurdles, right? One is thinking, I don't need to do anything because I'm not trading, dormant, whatever it may be, no transactions going through, so you don't do your accounts. The other part is you do the bit of the Companies House and you do your dormant accounts. There's no corporation tax due because you're not doing anything, and that's it, you forget about it. But the reality is,
yes,
different.
Absolutely, yeah. So it could well be that your business is dormant. You may not have a bank account set up, or absolutely nothing's going through the bank account, in which case that makes you dormant. And you're right, you do go into Companies House, you file 0 or nil accounts to Companies House. However, that doesn't stop you from having to file with HMRC separately, and that's your CT 600, which is your company tax return at the end of the year. Yeah. And if it's dormant, it just needs to be a nil return, and that still needs to be filed, and non-filing of that will lead to penalties.
Right, okay. I think that's it. I think we'll cover that in a second, because I know that's the second point that we want to go through. So the first tip there is understand the obligations. If you've set up a limited company, you've automatically got filing obligations for Companies House and HMRC that are unavoidable, even if you haven't got any transactions. If you haven't got a bank account, haven't got a company, doesn't matter. You've still got to file with HMRC, still got to file with Companies House. So be aware of those deadlines and get something in place.
Absolutely.
Okay,
yeah.
So let's jump onto that second error then, because it ties in really nicely. So that second error is essentially built on that, and it's underestimating what's involved in managing a limited company from a compliance point of view. Tell us more about that.
Yeah, so I mean, when we have personally held properties, we talk about a deadline of 31st of January, and indeed back to my first mistake, which is you only start declaring your income once you start receiving rental income, and that's when the property goes on rent, which is different to the limited companies. However, when we are looking at limited companies, we have obligation from Companies House, whether it's the annual filing, we've got the annual confirmation statements, which again goes to Companies House, and we've got a tax return filing with HMRC, which lead to penalties, quite severe penalties.
Right, okay. And we've put together this little table, haven't we, of all the deadlines that you've got.
Yes.
So you mentioned there, you've got your year end, you've got confirmation statement, which is something you do every year, which is, what's your confirmation statement for those who don't know?
So confirmation statement is effectively just an annual filing of reporting any changes in the business, if there are any. So, making sure the directors, the statutory shareholders, and the registered address remain the same or change. You have to provide a registered email address. It's just basically notifying Companies House of any substantial changes.
So a lot of people aren't aware of that. That happens every year. That's outside of your accounts.
Yep.
You've obviously got your accounts to Companies House. We've mentioned corporation tax return to HMRC. Got to make your corporation tax payment to HMRC.
Yep.
Bit of weirdness on the date with that, isn't there?
Yes, absolutely. So I've made a table here to kind of show people, because it's very difficult to kind of explain this in terms of deadlines, because we have a number of different things in terms of the accounts, which have a 12-month deadline. We have confirmations, which are 12-month but due within 14 days of that 12-month. We have a CT600 tax return, which is due within 12 months, but the payment is due within 9 months. So as you can see, it becomes very complex. I've tried to summarise it in this table, which will hopefully help listeners get a vague idea. And then also, your self-assessment tax return filing obligations as a director of your business potentially, which still fall on 31st of January, which may not fall in line with your accounting year. So it can very quickly become very messy unless you know what to do. And of course, when it comes to things like tax planning, really important to understand when your business year ends and when your personal tax year ends.
Yes.
So if you are drawing out dividends, for example, you know exactly which year they fall in. And actually planning these all around all these deadlines that we've got in front of us can be very complex.
Yes, okay. I think you're touching on a key point there, which is personally held properties that you own and you declare through your self-assessment tax return. That's regular clockwork. It's the tax year runs April to March, and your deadline's at the end of January every year for your tax return and your payment, with a second payment in the middle of the year for payment on accounts. Companies, every single company has its own year end. And it depends on when you set your company up.
That's right.
So if you set a company up in September, that'll be different to somebody who sets one up in March. So you've got this cycle that's very unique to your company that you've got to think about in terms of year-end accounts, corporation tax return, corporation payments. Those dates are specific to you and your company. Alongside that, you've got your personal obligations. So if you've taken any dividends out and you've got personal tax you need to pay, you've then got the tax year calendar that's running alongside that. So you've got to try and mesh together your company's affairs and deadlines with
your personal affairs.
the personal ones as well. And there's quite a lot to put together and remember.
Yep.
So it is important to get organised. But there's also consequences of not filing as well. And
absolutely, yeah. So obviously people will be aware that there's the £100 self-assessment penalty when you file your personal tax return late. We have the same regime with company accounts and company tax returns, and it's really important that people understand this. So I've made a quick sort of table for people to understand in terms of understanding the kind of severity of some of these penalties, because they are quite steep in terms of
So this is the company's house penalties that we've got on here.
Yes.
So a day late, 150 quid. And if you're 6 months late, that's rising to £1,500.
Exactly. Yeah. So and these are drastically more severe than personal self-assessments ultimately. So therefore, it makes the filing even more kind of demanding for limited companies to make sure you get right and on time. And as you can see, there's actually penalties for subsequent ones as well.
Yes.
So if you're a kind of a serial late filer, ultimately the level of penalty becomes even more severe.
Yes. Yeah. Absolutely. And that's just company's house.
Yeah.
You then also got your corporation tax return, and HMRC have their own penalties as well for corporation tax returns.
And again, this is so common, James. I pick up the phone to so many people who file their dormant accounts themselves because they just believe they're the basic things to do and just nil accounts because they haven't done anything in the first year of trading, which is fine. But they underestimate, they completely forget that there's an obligation to file with HMRC, which is the CT600 tax return. Even though it's a nil return, it still needs to be filed.
Yes.
And if it doesn't, it results in these fines here you're looking at, which is pretty similar to your self-assessment late filing penalties. So we get a huge amount of clients who approach us when they start getting those dreaded brown envelopes through the post after 12 months, and they weren't aware of it because they thought they've done what they need to with Companies House.
Yes.
Not underestimating what else is required.
Yes, absolutely. And the other thing that some people aren't aware of is, so we talk about credit scores and credit rating. We're all aware of personal credit scores, but limited companies have credit scores as well. And if you file late, your credit score will take a hit. And even as you approach month 9, the later you file in the year, that can impact your credit score as well. So if you're looking to raise finance, trying to get a mortgage, the lender's going to be looking at you as an individual, but will also be looking at how you're running your company and getting these things done on time as well. So it really is important to get on top of these deadlines and get your obligations filed early. Yeah. The interesting thing with this, though, is that there's a lot of complexity in terms of managing all the dates, but the work itself needn't be that complex, right? We're not talking about accounts that are that thick. For most property investors, it's a straightforward task that needs to be done. It's just the challenge of managing all of these multiple deadlines. I think that probably leads on to the second tip, right? It's about understanding all of your deadlines for your limited company and getting on top of it and being as proactive as you can. And I think it's a good time just to mention some of the services we've got at Provestor. So we've got a new service. It's £14.99 a month. £14.99 a month. And that allows you to manage your limited company, including tracking all your deadlines and submitting your accounts to Companies House and submitting your corporation tax return to HMRC as well. So that's one really straightforward way to get organised. Head over to Provestor, sign up for our low-cost limited company service, and that's it. We're going to take care of reminding you about those deadlines and make it dead easy to click the button to file your tax returns and your company accounts as well.
Yeah, and it's really important that clients do get their ducks in order really early on, because we appreciate the amount of stress levels this brings to clients after month 12 or very close to the filing deadline. And actually, if you can get all these things in order very early on, and they are really important regardless of whether you're actually active or not, because actually getting your bank connected, because you may have some very minimal expenses, for example, and getting those right very early on is really important. So you've got an understanding of what your business is about to do. Go ahead, and like I say, you've got to file anyway at the end of 12 months. So that kind of cost. I mean, you see the level of penalties that we're talking about here, James, and that kind of cost is absolutely negligible.
Yeah, absolutely. And I think you made a good point there about connecting your bank and cracking on with record keeping, because that leads on nicely to the third area that we were talking about, which is when you see landlords using limited companies who aren't keeping the proper records, because there is a bit of a shift from having a personally held property to having one in a limited company when it comes to banks and cash and keeping track of records. Do you want to tell us a bit more about that?
Yeah, so the shift is that once you've created this limited company, as people will know, you open a bank account which is specific to that business bank account, and hopefully 100% of your transactions for that business are going through that bank account in and out. So it's really important that you get that bank account set up and you're doing some sort of bookkeeping in terms of understanding what's coming in, what's going out. And it's dead easy if you've got something which is just bank fed directly into your accounting system. You know exactly what's being, going into the business, and you can allocate those costs accordingly. Yeah. Slightly different to personally held, because people use their, maybe a joint account with their partners or their own personal private accounts, and things get very messy. Whereas with a limited company, it's going to be streamlined into that one bank account, and the bookkeeping at the end of the year will be done on that account.
Yeah, and I think the really important point to make on this is that you've got that company bank account set up for your limited company. That bank account and everything in it belongs to the limited company, not to you. It belongs to the limited company. And every penny in that bank account needs to be accounted for, and you need to have the appropriate records in place for that. Because the comparison is, let's say you're refurbishing a property and it's personally held, you go down to B&Q and you spend a couple of £100 on paint from your personal account, and you don't put on your self-assessment tax return. HMRC won't care. You're missing out on getting that expense and reducing your tax bill. But HMRC will not care, because it's your own personal money. If you've got a limited company with a company bank account and you spend a few £100 on paint, and you don't put it in your accounts, there's a hole there. There's a couple of £100 cash missing from your company, and HMRC will care about that.
Yep.
So that the standards in terms of record keeping that you need to go through for a limited company are higher, because essentially it's not your money.
Yeah.
It's your company's money.
Absolutely. So the audit trail, as per the businesses, the issues with audit trails does absolutely exist. And like I say, the hole there exists in terms of not allocating a certain amount to an expense that you want to have in the business. And these kind of things are really important in terms of bookkeeping, because when we try to do tax planning for an individual at the end of the year to understand how much profit they've made in the company, so we understand how much dividends that they can extract from the business, if these things aren't correct, it's very difficult to understand how the business is operating from a trading, retained earnings perspective.
Yes.
And when you have some very challenging conversations at the end of the year with clients who haven't done these bank reconciliation or bookkeeping as they've gone along, it's very difficult to give tax advice, because we just don't know.
Yes, I guess then you're into the territory of unlawful dividends. Taking money out of the company that the company hasn't got to pay out as a dividend. There's also things like the legal requirements about records. So Rami, how many years do you need to keep records for?
Yeah, so 6 years is the legal requirement to keep, and obviously Companies House can go back much further than that if they believe something untoward is happening. Yeah. But 6 years is the guidance in terms of having to keep records.
Yeah, okay, so you've got to get that stuff in place. It's not just a once and done job. You've got to have it, keep it in place, and know that in 6 years' time, HMRC can come knocking and want to inspect your records. And as you say, for severe cases, they can go back even further as well. So just get on top of it, get a system in place, so you can track all of your record keeping really, really, really accurately. I think also, again, that's a good point to talk about the third tip and how Provestor helps with this. With our service that starts at $14.99, there's a great feature in there for bookkeeping. It takes the hassle out of this, connects directly to your bank account, removes all the jargon, asks you those key questions, because we're not going to drill into revenue versus capital expenses in this particular episode. Go back and look at some of the episodes where we do. But something that's really important, every single transaction, you need to classify it as revenue and capital. And that's a very boring thing that we need to do for tax purposes. We make it really straightforward from a bookkeeping point of view to ask you the key questions that you need to do to decide how that's going to be classified. So what we've done, I'll just show you. So earlier on this morning, I recorded a very quick demo of bookkeeping and how it works in Provestor. Let's take a look. So here we are looking at bookkeeping in Provestor. What I've got here is my business bank account, and my transactions have been imported automatically from my business bank account into the Provestor app. So let's go ahead and deal with this transaction here from B&Q. So I'm just going to confirm, yes, this is a business expense. Search for a category, and I know in this case that this was for paint, for a refurb. So I search for paint and select building and maintenance materials. I'm just confirming, yep, all of that was for paint for this category, and it was for this particular property, 36 Hurst Drive. All of it was for that property. This question here, does it increase the value of 36 Hurst Drive? Really key question, and this is helping us to figure out whether something's a capital or revenue expense. In this case, no, it doesn't. It's just simple maintenance, so I'll click no. Now let's enter a description. Paint for kitchen. Who's the payee? Pay to B&Q. Here's an overview, and this allows us to do more complicated things like splitting it between different categories, but I'm just going to click continue. And finally, I've got the option to upload a receipt, and I've got one just down here, so just a simple drag and drop, and there we go, your receipt's attached, all in one place. All your records are there, securely stored inside Provestor. We tap save, and here we are back at the bookkeeping screen again, and you can see that transaction from B&Q. It's now got the details in, and a little green tick on there to say that we reviewed it and put it into our company accounts, and it's that straightforward. So as you can see, it's really straightforward to get on top of your bookkeeping with our company accounting software. $14.99 a month. Head over to the Provestor website, take a look at it. Great. So now that's the three tips that we've gone through. What I've also got here is a few questions that have come in from social media when we're asking people about what the challenges they face with their first set of year-end accounts. So a quick fire round. So the first question is, I've received a notice from HMRC to deliver a corporation tax return. What should I do? Right, brown envelope, end of your first year, first big letter from HMRC, notice to deliver a corporation tax return.
Yeah, so I mean, obviously we talked about this. Don't panic at this stage, because just a reminder, which is a standard letter that gets sent out at the end of the 12 months. But it's understanding you've got a system in place to be able to file that tax return, file your accounts, and act accordingly, get it filed with HMRC.
Yes, I mean, I think the way to think about that is, if HMRC were a different company, what they do, they send you a letter and say, congratulations on finishing your first year. Just a polite reminder, You've got a year to get your corporation tax return. We'll catch up with you soon. That's what that first letter means. But instead, it can look quite severe. Okay, so that's the first one. Second question: I've missed the deadline for submitting my company accounts and tax returns. Help. What do we do? Yeah,
and a really common one, because that's when people start asking for help and actually trying to get their ducks in order, really. So
and that's when you get the red letters, not the black letters.
Yes, and in case this is just an action to get going, get it filed as soon as possible. We've seen some of the penalties we've shown earlier in terms of filing deadlines and what the consequences are, and they're quite severe in terms of deadlines. So it's really just get some help. Get them done, get them filed as soon as possible. If that means going to your accountant and getting a service done as soon as possible, really important to just get them filed.
Yeah, absolutely. Because every day that you go past, you're hitting another penalty deadline. Your penalties are going to go up and up. It's not a one-shot affair. Your penalties go up.
Yeah, and also the likelihood is you're paying your tax late as well if there's tax due, and that of course is interest as well.
Yeah. Okay. Yeah. Great. Third question: I've made a loss for the period. Do I still need to file accounts?
Yeah, really common question. Yeah, so we talked about how a company is active earlier on in the show, and if you're loss making, you're still an active business, so it doesn't require you to be profit making to be active, and a loss needs to be declared and needs to be shown on the accounts and the tax return. And it's really important, because actually it'll help you in future years. You don't want to wash away that loss and never see it again. So
why?
Because that loss can be carried forward and used against your future year's profits, hopefully.
Okay, which means that your tax bill comes down?
You can reduce your profits in future years, absolutely. So it's really important that people don't just lose those losses and negate them just because they think they're not actively trading because they're not profit making.
Yeah, okay.
So all the penalties will still apply if you don't file, just because you're loss making. So really important those are recorded, carried forward and used against future year profits.
Great. Nice and clear, thanks. So the final question, Nadeem, can I submit limited company accounts myself, or do I have to use an accountant?
I mean, this answer is a possibly, James, and that's because filing your company's house accounts with company's house is one thing. Your tax return with HMRC is a separate thing. One thing you're just required when you file your company's tax return, though, is your accounts attached to the tax return, and that requires a software which allows you to attach the account and submit to HMRC. So, if you are very adept to preparing a set of financial accounts, which are completely correct in terms of all the obligations you have in preparing a set of financial accounts, and are able to attach them through a professional format which HMRC require to the CT600 and then submit the CT600, then yes, you can. So again, get your ducks in order, have that software available, use an accountant if need be. If not, then get that in order, because it's not as straightforward as some people may think, like a self-assessment, for example, which you can just go on the Gov website and effectively submit a tax return to them.
Yeah, absolutely. And that's like that differentiation. So you can go onto the government website and you can upload your accounts and it will submit them to the company's house and it will prepare your corporation tax return for you. So the last mile, yeah, you can do that. But to get there, you've got to have a set of company accounts prepared to the relevant international standards.
Yep.
So this isn't a handwritten, thing that you do in the conservatory on a Sunday morning. You've got to have a set of accounts to the correct international standards that you can then submit onto the government website, which sends it off to Companies House and HMRC. That's the only way that you can do it yourself.
Yeah.
But in order to do that, you've got to be able to produce a set of accounts.
Absolutely.
That's why not many people do it. So what you do, get some software instead. Again, potentially the final plug, $14.99 a month. Use our service. You can do it yourself. It produces your accounts for you, sends them to Companies House, sends them to HMRC.
Accurately,
yes.
Absolutely.
Yeah, absolutely. Great. Brilliant. Thank you, Nadeem. That's everything for this episode of the Property Tax Show. If you're approaching the end of your first year, hopefully you have found this useful. As ever, if you've got any questions, put them in the comments below, and I'm sure Nadeem will be happy to reach out and help you. Please do hit that like and subscribe button. We produce these property tax shows on a really regular basis with really useful information for property investors like you. And if you're struggling with your taxes, you need a bit of help, head over to the Provestor website. If you're late and you need somebody to hold your hand and get you back on track, we can support you with that. If you find our software at $14.99 really appealing, head over to the Provestor website and sign up for that as well. So hopefully we'll see you next time on the Property Tax Show. Thanks a lot and goodbye.